What's going on, guys? It's Andy here. Welcome back to another episode of the Andy Kandola Show. So today I got a lot to go over. One of the first things I'm going to run through is the top 5 monthly paying dividend stocks that I believe are currently the safest dividend stocks, plus the stocks that I currently have in my portfolio that are paying a monthly dividend. Now, additionally, I do want to go over some stuff in the news. I want to go ahead and take a look at what Mark Cuban said in regards to his interview with CNBC as far as what he thinks is going on with the current market, and then go ahead and look at the current price in the market. Now, the Dow Jones has been all over the place lately, so I do want to go ahead and share with you guys currently what's going on in the market and why there's so much volatility. Additionally, I'll go ahead and go over my portfolio as well, so you guys have an update as far as my portfolio goes. So this portfolio is separated in the 11 sectors in the S&P 500, but these are going to be all stocks that do pay out a dividend. So I'm not going to run through all the stocks in my portfolio, but if you guys are interested, I do have a link down below in the description that basically shows you my full portfolio. Now, my goal and my strategy with this portfolio, guys, is to be very transparent and take you guys on the journey so you can see how you can build another source of passive income. And my simple strategy with this is to just build another source of passive income. Now, if you do want to follow all my trades, I do have a private Patreon account that I did set up, and I have a link for that down below where I basically share all my buys and sells. But currently, just to give you guys an update on my current portfolio, my portfolio is sitting at $21,400 as of right now. And now for the last day, I had a loss of $91. And let's just see what we had for the last week, which was a gain of $555. And then for the last month, I'm up $537. And then the last quarter, I'm up $404. Now, I just started this portfolio recently in the last couple months. And basically, I'm looking at just growing this portfolio and investing with it with dollar cost averaging. And now, just an article that I actually pulled up on dollar cost averaging, which I thought was very interesting because that's the exact strategy that I have been using. It was by Susan Orman, and she's actually been investing in the stock market very heavily, and she did say that she made a serious sum of money during this whole pandemic and during the market crash. Now, Susan is a financial advisor, so she's been investing in the market pretty heavily, but one of the things that stuck out to me was in this article where she talked about, let's just assume you have 8 months of an emergency fund. Let's assume that you have no credit card debt. Let's assume that you still have money coming in. You should be dollar cost averaging every single month into the stock market. Now, to me, guys, that has been my full out strategy the whole time, is to dollar cost average in the market, because I just don't like the overall volatility in the market, and I just cannot stand looking at the price fluctuating on a day-to-day basis. So it takes that emotion out of the stock market, where I don't need to be able to tell when the stock market is going to be at its lowest and sell at its highest. Now, just looking at where the stock market is for the last week, the stock market did jump earlier in the week, and that was because Moderna, one of the companies that's testing out a vaccine for the current pandemic and the current virus that's going on, did have some good trial results, and because of that, the stock market did make a huge jump earlier in the week, and since then it's just been consistently sitting at around 24,500. So that's just a recap as far as what's been going on in the stock market. Now let's go ahead and jump into the 5 stocks that are paying out a monthly dividend. And as I go through these 5 stocks, these are going to be stocks that I believe are the safest stocks out of any stocks that are out there that pay a monthly dividend, and I'll share with you guys some of the sources that I look at and how I evaluate these stocks for their safety. Now, just to jump into the first stock that pays out a monthly dividend, and this is probably the most popular stock for a monthly dividend, which is going to be Realty Income Corporation. Now, Realty Income Corporation is a REIT, and basically they have commercial properties that have long-term tenants. Now, some of their tenants include like a Walmart or a Walgreens or a 7-Eleven, and those are just some of them that I know on the top of my head. But this company is actually a very strong company that has shown a strong growth in their stock price. And if we just look here at the last 5 years, this company has been pretty consistent, and just in the last couple of years, they have been growing pretty consistently. Now, additionally, I personally really like this company because they also have consistent growth in their dividends. Now, this company has grown their dividends for the last 26 years, and they've been growing their dividends by 4.38%. And this is actually considered a dividend aristocrat. And basically what that means is any company that has been growing their dividends and has been paying their dividends for the last 25 years is considered a dividend aristocrat. Now personally, I also like REITs because they actually have to pay out 90% of their earnings. And if we look here with Realty Income, they're actually paying out a payout ratio of 84%, which is just in line with basically what you would expect. And their dividend yield, guys, their dividend yield is 5.4%. So for a REIT, they're actually priced right in line with where a REIT should be. Plus additionally, if we just look at their dividend growth, there's a nice chart here that actually shows us their dividend growth. And if we look at their all-time dividend growth, as you can tell here, the chart has just consistently been going up. Now another website that I like to use along with Seeking Alpha is called Simply Safe Dividends. Now with Simply Safe Dividends, this is a very good site that actually rates the safety score of a dividend of a stock. Now I personally use this stock just to back up my research on the stock and just to see what they gave as a safety rating. Now I am not sponsored by this site, but I do personally really like using it, so I do want to go ahead and share that with you guys as well. Now with Realty Income, they're giving it a safety score of a 70, 100% would be a very safe score, but anything between a 60 to an 80 is considered safe. So this is a great stock that I believe that pays out a monthly dividend that can just grow over time. And I personally think this stock should be valued right around $65 to $70. So right now I do think this stock is a bit undervalued. And now let's just go ahead and jump into my portfolio. Now within my portfolio, I do carry Realty Income Corporation, and I basically carry that within my real estate sector. So let me just go ahead and show you guys that real quick here. Now I do personally really like the stock, and if we look here, Realty Income Corporation, my current value in the stock is $2,021, and if we look down here, my total shares are 39 shares that I currently have of the stock, and my average cost is $51, and my total cost is $2,008. But now that's just to show you guys that I do have this in my current portfolio. Now let's go ahead and jump into the second stock that I personally like as a monthly dividend payer, which is going to be Pembina Pipeline Corporation. Now Pembina Pipeline Corporation is another monthly paying dividend stock, and if we just look in the last year, they've been consistently at a price about $37. So now with this whole pandemic and with the market crash, this stock has been slowly climbing. So this company is actually in the energy sector. Now if we just look at their last 5 years, this company has been pretty consistent as far as where their share price has been. And if we look at their dividends are actually 7.25% or $1.83 per share. Now this is another company that I do have in my portfolio, so I'll share that with you guys. But as far as this company's growth goes, they have been paying out dividends for the last 4 years, and their dividend growth is actually at 2.85%. And now if we just look at their dividend growth for the last couple years, they have been paying out a consistent dividend, so that's a good sign. So this is another stock that I like within the energy sector that does pay out a bit of a higher dividend. Now if we look at their safety ratings based on Simply Safe, their safety rating is an 80, so their dividends look like they're going to be going nowhere anytime soon, and we've already evaluated their dividend yield, which is 7.12%. So personally, I do like the stock as well. And now if we just go down to my portfolio, I have the stock within my energy sector, and basically this stock is something that I just added more recently to my portfolio. So currently I have 7.91 shares in my portfolio at an average price of $25.26, and my total cost in this stock was $200. So this is a good way to diversify in another monthly income dividend stock. Now let's go ahead and jump into the next stock, which is actually going to be within my financial sector, and the company is Maine. Now Maine is within the financial sector, and what they're basically considered is a BDC, which basically stands for a business development company, and their main objective and their main goal with this financial institution is to lend out money to mid-cap companies. And basically by lending out money, they charge an interest rate on that money, and when that money is returned, that's how this company makes their profits. Now additionally, this company does have an equity stake in over 200,000 companies as well, so they do invest in companies along the way as well. So they have multiple ways that they actually earn money. Now with Maine, if we just look at their stock price for the last year, the stock has had a consistent price of around $41 to $42 per share. And of course, with this crash, their stock price jumped as low as $15 and now is slowly climbing back up to around $30. So this is a long-term stock that I believe is a good dividend stock within the financial sector because this company has been growing. And if we just look at their last 5 years, we can tell just based on their stock price trend that this company has been slowly growing over the last 5 years. And additionally, if we look at the last 10 years, this company has also shown some growth. Now, another nice thing with this company is their dividends. Now, Maine pays a dividend of 7.96%. So that is a very high dividend for a monthly dividend paying stock. Plus, if we look at their growth, they've been growing for the last 4 years, and their dividend growth rate for the last 5 years is an average of 4.31%. And now, just to look at their dividend safety score, Maine has a 62 safety score, meaning that this stock is considered safe. And overall, I do like the stock within the financial sector, so I do have this in my portfolio as well. Now, in my portfolio, let's just look at Maine real quick. Maine, I currently do carry, and I have 10.39 shares in my portfolio at an average price of $24.95, and my cost basis on the stock was $259. And in total, if we look in the last day, I am up $8.31. Okay, and next, let's go ahead and jump into the next stock that does pay out a monthly dividend. And the next stock is going to be within the REIT sector, and that's going to be Stag Industrial. Now, Stag Industrial is a REIT. Basically, they're another real estate investment trust that owns properties, but their main focus and their niche is going to be industrial properties. Now, with Stag, they have over 400 industrial properties that they own. And this stock has had a consistent share price at right around $30 to $31 within the last year. And as we can tell, the stock also took a hit, but it is climbing back up to about $25. Now, additionally, if we just look at the last 5 years of the stock, this is a company that has been slowly but steadily growing. Now, additionally, if we look at the dividends for the stock, I really like to see a dividend growth like this, where this stock has grown their dividends for the last 8 years, and their dividend growth rate is at 2%. Now, additionally, the stock does have a really nice dividend yield at 5.71%. And of course, we know that the stock does pay out a monthly dividend as well. Now, additionally, if we just look at the safety score for the stock is considered borderline safe. So it does have a safety score of 45. So this stock is another stock that I have been watching very closely. And if we just look at the performance of this stock and the share price, in the last 3 months, this stock did go down about 22%. But if we look at their last year, they're down 14%, and if we look at the last 5 years, they're actually up 14%. Okay, now let's go ahead and jump into the fifth dividend stock that I personally like, that I do believe is a bit on the safer side for a monthly dividend stock, is going to be Ltc Properties. Now, Ltc Properties is another REIT which is within the healthcare sector. Basically, this stock, they own senior housing facilities. So within the healthcare sector, that sector did take a big hit because less and less people are going into senior housing because of this pandemic. But overall, long term, I do see this stock being a consistently growth stock. And previously, they were trading at right around $49 to $50 per share, and currently they are trading at about $35 a share. So to me, unless this stock goes up to about $40, this is still underpriced. And if we just look at the last 5 years, this stock has just had a steady stock price. So it is valued right around that $40 to $45 per share. And if we look at the last 10 years, the stock has had some steady growth as well. Now, additionally, just looking at their dividends, the stock does not have a dividend growth rate because they just cut their dividends and they reduced their dividends. But even after they did that, they're still paying a dividend yield of 6.3%. And if we look here, their 5-year growth is at 2.25%. And now just to jump into their dividend growth, we can tell here that this stock was growing their dividends. And now because they reduced their dividends, we're not seeing a dividend growth, but that doesn't mean that they cut their dividends. The stock is still currently paying out its dividends. It just hasn't grown its dividend in the last couple of years. Now, Ltc Properties is considered a 52 as far as their dividend safety score, so they are a borderline safe stock, and we already know what their dividend yield is. So guys, this is another stock that I'm personally just keeping an eye on right now that I currently don't have in my portfolio, but I'm watching very closely. But now those are going to be the 5 dividend dividend paying stocks that I'm currently watching or I currently own in my portfolio. And after doing all this research, those are the 5 stocks that I consider to be the safest stocks that pay out a monthly dividend. Or let me know in the comments below if you have any questions or comments in regards to the 5 dividend stocks that I shared. Now, just jumping into where we are with the stock market and what's going on in the economy and Mark Cuban's take on this, let's go ahead and listen in.
Concerned about both. I think the market is overvalued. I think it's almost impossible to predict where consumer and corporate demand is going to come from. It's, and because of that, it's hard to create a valuation for businesses.
Even in the so-called stay-at-home stocks, Mark, which are so clearly benefiting, whether it's a Netflix or a broadband provider, a Zoom video. I mean, there are a number of stocks which are holding up quite well because of the times we're living in.
Yeah, there's no question. I mean, look, I'm a holder of Netflix and Amazon, so I'm not saying there aren't stocks that'll benefit. They are. But when we look at the market broadly, it's very difficult to project what's going to happen in terms of demand. I mean, business has been fundamentally changed. Consumer consumption has been fundamentally changed. You had the PNC CEO talk about how online purchasing has gone up so significantly within his business, and banking is the most complicated of all processes for consumers to do online. So if we're seeing that there, we're going to see it even more so in other industries.
So after hearing that, I could not agree more with Mark Cuban as far as the disconnect with the stock market and with the economy. Now, the economy and small businesses have just taken a huge hit while the market still keeps going up on a monthly basis. Now, if we just look at the last 3 months, the market's climbing while the whole economy is still in the same exact spot. So there is definitely a disconnect. And personally, because the federal government and the Federal Reserve just keeps printing money, they're basically holding the market from crashing. But in general, as Mark Cuban has said, the market is totally overvalued at this point. So be aware when you're investing in the market. I can see another dip coming down the road here once we get some more results from the second quarter of this year in some of these retail companies and even some of these tech companies, because I do believe a lot of tech companies are currently just way too overvalued. And that's basically where I see a disconnect within the economy and the stock market. But guys, I'm gonna leave it at that for this video. Hopefully you guys enjoyed the video, and if you like content like this, make sure to subscribe to the channel down below. But that's gonna be a wrap, guys. I will see you guys at the next one.